Not every trade goes your way. That is just the reality of trading, and without a plan to limit your losses, one bad trade can erase weeks of progress. A stop loss is how you protect yourself from that, and knowing how to set one correctly on MT4 is a skill every trader needs before putting real money on the line. A stop loss is a preset instruction that automatically closes your trade if price moves against you to a level you define. It removes the emotion. You decide your risk up front, and the platform enforces it. If you buy EURUSD at 1.1000 and set a stop loss at 1.0950, your maximum loss on that trade is 50 pips. Without it, the trade stays open and keeps losing, with no automatic limit. One thing worth knowing, a stop loss does not always guarantee you exit at the exact price you set. In fast-moving markets, or around major news events, something called slippage can occur, where your trade closes slightly beyond your target level. That said, stop losses still provide essential protection in the vast majority of situations. The best time to set your stop loss is the moment you open the trade. In MT4, you do this directly in the order window. Open a new order by pressing F9 or clicking the New Order button in the toolbar. You will see a field labeled Stop Loss. Enter the price where you want the trade to close if the market moves against you. For a buy trade, that price sits below your entry. For a sell trade, it sits above. Confirm the order, and the stop loss is live. If you have already opened a trade and need to add or adjust a stop loss, go to the terminal window at the bottom of the platform. Click the Trade tab, find your open position, and right-click to select Modify or Delete Order. From there, you can enter a new stop-loss level and save the change. MT4 also has a trailing stop feature, which moves automatically as the market moves in your favor. It locks in gains as the trade develops. Just be aware, trailing stops on MT4 run on the client side. If your platform closes or disconnects, the trailing stop stops working. Plan accordingly. On placement, do not set your stop too tight. Normal price movement will trigger it before your trade has a chance to develop. Base your stop on a technical level, support, resistance, a recent swing low or high, somewhere that tells you the trade idea is simply wrong if price gets there. Trade with risk you can afford to lose, and keep your risk per trade small. Many traders stick to 1 or 2% of their account balance per position. That discipline, combined with a properly placed stop loss, is what keeps you in the game long enough to improve.